Hello and welcome to One-to-One Mining Investment APAC. Now we're going to be talking about ESG and the importance for junior mining companies of making sure that their ESG is all in order if they are keen to attract investors to their projects. And to talk to us about this important topic, we have Jacqui Murray, who is partner and investment team leader at Resource Capital Funds. Jacqui, great to see you today. Thanks for joining us.
You're welcome. Thanks for the invite.
If we could just start things off, just a quick snapshot. Tell our audience about Resource Capital Funds and your role there.
Yeah, sure. So RCF was established in 1998, so we've been around a while. Since that time, we've provided financial support to mining companies. We're a mining-focused fund, and there's been 187 mining and mining services companies across 51 countries and 32 commodities. We invest across the full development risk profile, so anywhere from exploration companies, construction, funding operating companies, and also services and mining innovation companies, and across the full capital structure. My role as investment team leader is to source investments and then coordinate the RCF due diligence process into potential investments, making those recommendations, and then ultimately managing the investment for our investors.
So how does RCF integrate ESG into your investment decision-making process?
So we have had a responsible investment officer full-time in RCF for the past 8 years. So it's an important part of our investment decision-making. She sits in our technical team and forms part of our due diligence team when we're looking at investments. So if we look at sort of breaking down the ESG, on the environmental side, this is a lot about the permit status. We look at water management plans, emissions plans, tailings management, and an increasing focus on biodiversity. On the social side, this is a lot about stakeholder relations. Humans change their mind about things, so we recognise this is often a snapshot in time. So we're looking at where the company is for their project status, where we feel they should be for that stage in the project, really getting a sense for how the company interacts, how they feel about their community, and also we put people on the ground to assess what the community thinks about the company. Particular focus on the social side if there's resettlement required or artisanal miners. And then on the governance, that's a big focus on country risk into the investment, and also the people in relation to ESG. So a big focus on whether there's capability within the company to manage ESG. That's probably a gap we see often in junior companies, is just having a dedicated resource. And then the attitude at the board and senior management level to ESG matters.
Absolutely. And that sort of engagement you have with the company around ESG, is that just sort of, pre-investment making, investment decision making, or is that ongoing throughout your investment in that company?
So depending on the level of our investment, and quite a lot of our investments are quite significant ownership levels. We have on multiple companies implemented an ESG committee, so particularly committee focused on these matters. In some cases, it's been a management committee. In others, it's been a board subcommittee with our involvement on that. And the purpose of that is to provide the company with ongoing guidance and also support for how to manage these matters. So that's one key area. We have also, quite often we get nomination rights to appoint a board member. And we have successfully found some people with good ESG backgrounds to put on boards to help bolster that skill set.
I mean, I guess with investing in so many companies over the years, you must become something of a sort of knowledge base, sort of center of excellence for ESG practices. I guess you can, take some practices from one company and sort of put them across to another.
Yeah, absolutely. And I think, you know, a recent example, I worked with a copper company in Africa. They were, you know, early on their journey of ESG reporting. And, you know, with the clearance of another company, we were able to share reporting from another company based in Africa that have put together some early stage reporting and give them a good example of what's out there, what other junior companies are able to do, and certainly give them, you know, a template to start from. So that's part of it, is just showing them and sharing learnings across our portfolio where we can. I think the other part is understanding who the experts are in this field, who are there to help. There are certainly consultants from the range of you know, quite material firms to one-man band consultant firms. And so there are people out there that, for the right focus for a junior company, can step in and help the company assess what it needs to do.
Because it is an issue, isn't it, for junior companies when they're quite small, and a lot of their focus is obviously going on to sort of, you know, the exploration and development of their projects, that they often maybe don't have the resources necessarily in-house to be able to, you know, provide the level of ESG sort of coverage that you would like. So you're providing that extra sort of level of assurance in that area.
Yeah, and one of the things that with quite a few of our companies that we recommend they do is get someone to come in and do a gap analysis, and so really assess where they are at, not just against local laws, which quite a few companies are typically focused on, but really assess how the companies are performing in their policy and practice against international standards. So we're talking IFC, Equator Principles. And because they're the standards that international investors will assess them against when they're looking to invest. So we help them by directing them to the right people that can come in and assess that, and then get a ESAP, an environmental social action plan, which just sets out things that the company can do over time, some reasonable implementation dates, and really right size the work program for the company and where it's at.
Do you have any specific examples you can share from some of your companies? So, for example, on the environmental side, some initiatives that your companies have done.
Yeah, look, I think on the environmental side, a lot of that is permitting focused. I guess one example, not so much the company, but us, is in response to some of the tailings dam disasters. We stepped back and did a review of our entire portfolio, and looking and reassessing the risk of the tailings dams, and not just, you know, our initiative. That's something that our investors in our fund were requiring at that time. So you know, when events like that happen, it makes you stop and think and just assess whether we have adequately assessed that risk.
Obviously, something like a tailings dam issue, that's a very long-term commitment for you guys, and I suppose RCF, you invest, you know, often invest at an early stage in a project, or at that sort of development stage. To what extent are you looking at the sort of full life of mine and, you know, sort of end of mine life, environmental impact?
Yeah, so when we're looking at our investment, it's we are looking at the company all the way through to closure, and you know, while we may be investing early in some companies, we're what we consider the long-term investor. So our average is, you know, 4 to 5 years is what we're looking to invest, but it can be much longer. So we see ourselves as a material long-term investor, and you know, we are looking for ethical investments where companies are doing the right thing. And so the earlier stage, the actual more opportunity we have to ensure their plans and their designs are done in accordance with the latest standards and best practice.
So how is the mining industry sort of performing at the moment? Obviously, you know, the image of the industry has been damaged somewhat recently by this incident with the Rio Tinto iron ore mine, where they you know, destroyed some heritage sites. How do you think they're performing?
Yeah, look, this is obviously a complex matter, and you know, in terms of when we see that, and I'm based in Western Australia, so that's close to home. You know, it's certainly made us stop and review our, you know, we're currently in due diligence on an investment now, and looked at the scope of our focus there to ensure that we were adequately looking at heritage and local ownership issues. I think the important aspect there is to focus not only on legal compliance, but we also need to be aware of community standards and what expectations are changing. And I think, you know, what I said earlier about social being a snapshot in time, understanding where sentiment is heading is important, because you know, standards are increasingly becoming stricter in this area for good reason.
I mean, that seemed to be a case where you know, they had sort of investigated the situation, they had met the regulatory requirements, but misread the you know, the direction of travel in this space, and obviously paid the consequences with the, you know, the CEO and some senior management being fired.
Yeah, and look, not commenting directly on that particular incident, but I think probably why it's so important when we do our due diligence that we do that on the ground check to understand what the community thinks about the company and the stakeholders think about the company. And so not looking at the strict legal compliance, but really how is this company seen? And that really, that paints a potential, you know, risk profile that, you know, maybe not foreseen at the time.
Absolutely. And the mining industry, I guess, at the moment has quite an opportunity to, you know, really get behind the decarbonization of the world and the sort of, you know, the green, the renewable sector, given that, you know, it's going to provide great opportunities for miners to supply the materials for this sort of decarbonization process. Surely this is a fantastic opportunity for the mining industry to really improve its public image as a whole.
Yeah, look, I think mining's image is something that you know, we've always struggled a bit with, and certainly the mistakes and errors have huge impacts, and they're quite substantial. So it's hard to combat that. I think as the world focuses more on electrification, it is learning how much we need from the mining industry to make that happen. So while, you know, previously we might have talked about, you know, the need for mining to advertise the good it does more, I think that just the general education of how much we need these metals to go into these products to help the world, I think that is improving over time.
We've talked a bit about environmental and social side of ESG, and on the governance side, what are some of the initiatives that you guys are encouraging in this space?
Well, certainly I talked about forming an ESG committee where needed, if it's a particularly high risk area for the company, and ensuring there's ESG capability on the board. I think one area of focus we look at is diversity of boards, in just ensuring that level of quality debate at the board level occurs. And so, you know, certainly there's a lot of media and focus about diversity. there's still a long way to go in the junior company space. It's certainly one of our assessments, diversity.
What do you say to junior companies who say, oh, well, we only have a very small board. Most of the people involved in this project are white males. We can't find enough diversity for our board. What do you say to those people?
I hope they never say it directly to me like that. So, look, I think if you break your mind from a typical board member needing to be an ex-CEO, 20-year mining engineer, and broaden the skills that you need for a successful mining company board, you'll soon realize that there are a whole suite of people, from diversity in terms of gender and other diversity angles and backgrounds. So I think it's just really looking at what skill sets are really needed on the board and the gap, which then points you to candidates which you have a greater pool.
I was going to say a good example. Amanda Lacaz of Linus Corporation. She has a background in telecoms and marketing, I believe, and has very successfully turned around that company. So.
Yeah, the other one I would focus on particularly for junior companies as well is if you break the need to have 5 previous boards under their belt, and willing to look at people with very good executive backgrounds, good interactions with boards in their career, a good understanding of governance, they could be fantastic board members. And I think giving someone sometimes that first board role will break down diversity issues.
Absolutely. And also, obviously, mining companies can probably learn a lot from other sectors as well.
Yeah, absolutely. And it really, in terms of marketing and other areas, they're the key areas that you can draw on experience elsewhere.
Absolutely. So I guess your message would be just try a bit harder, look a bit harder.
Yeah, I think if you put it as a requirement to gain diversity, you'll find your pool widens.
Absolutely. And for 2020, you're still making investments at the moment, yeah?
Absolutely. We are seeing a good investment space at the moment. We're seeing, there was a couple of months there where I think companies really paused to assess where they're at. And likewise, we were focused on our existing investments and how they were reacting to COVID-19. But certainly over the last couple of months, we're seeing, a willingness to raise capital and progress projects. And so, appetite is still there for investment, and we are active in the market.
Absolutely. And do you think the pandemic situation has adversely impacted sort of companies' ESG, forcing them to cut corners, or has it put it into focus and made it, brought it front and center?
Look, I think certainly the governance angle. I mean, I sit on 2 boards of our companies, and very, very early on the board certainly, as with any unforeseen major events, the board gets to action and sees what the company needs and supports management through that. I think there's certainly the safety when we talk about ESG. I think safety has been a significant focus, and this is obviously the health and safety of our people. And one thing I've seen in the companies that I'm actively involved in is that mining teams are a very resilient bunch, and they're very good at reacting to issues that affect their operation. And this appears to be no different from what I've seen. Companies have jumped in, doing what they need to do to keep their people safe and to keep the projects going. So I see it as certainly a different risk to manage, but certainly one that all the systems and processes designed to manage other risks could be applied here. And we're certainly seeing some great responses within our portfolio.
Absolutely, because I mean the mining industry sort of, long track record of focusing on health and safety certainly has sort of put them in good stead during this process, with very few mines really having to sort of close down.
Absolutely.
Fantastic. Well, that's been a very interesting insight there into your investment process and the importance you're placing on ESG. Jacqui, thank you very much for joining us today.
Thanks, Leo.